sure what J-Powell is going to say. Let's see whether this thing is started. Can you hear this?
Oh yes, definitely.
All right, good.
Yep.
All right, good. So now we're going to wait for J Powell, and hopefully the stream isn't going to end.
I just got one of those webcam things. I'm gonna click start video. I want to see if it works.
Oh, right on, Cheryl. Bring it. Oh, hello.
Can you see it? Can you see anything?
Yes.
Yes.
I can't tell what you can see. How do I work out what you can see? Because I can't see what it looks like.
We see what's important. Yeah.
All right. So is it pointing at my boobs or something? Is it?
No.
Wedge your face.
Okay, good. Sorry, I just had to throw that in there. Okay, enough of that. I know it's working. It's fine. I'm turning it off.
Don't worry, Raoul will tell you if it's pointing at your boobs.
Okay, cool.
But I appreciate that you're turning on your camera, because a majority of the times in the morning briefings and in the live sessions, I'm just looking at names, but no one turns on the camera. So I appreciate it.
That was a name to a face, anyway, or a
Yeah.
face to a name, whatever.
All right. So we have 3 minutes until the Powell speech starts. Currently, the market is where it started, levitating around the pivot. In my opinion, the market is going to jump on, and also Alan mentioned the same thing, that the market is going to look for dovish clues, because they want the price to go higher. They want, they want to make money. They don't want bear market and sell-offs. So for this reason, I entered into a tiny buy, but I don't recommend to anyone.
Challenges. Recurring inflationary episodes and recurring financial crisis, and how to grapple with those issues. And central bank independence and the mandates
Started.
are institutions that are directed at meeting those challenges. So as Beatrice reminded us in this morning, in the 1990s, there was a wave of institutional reforms in high-income economies when they adopted inflation targeting and were backed up.
Can you hear
by
it?
more legal, legislated independence.
Yes.
So this
Okay,
concerns
that's
the
definitely
Reserve
not
Bank
J
of New
Powell,
Zealand,
so
Bank
we're
of
fine.
Canada, the Riksbank, the Bank of England, plus ECB around the newly formed euro. And arguably, these reforms had their roots in the challenges of the 70s and 80s, high inflation, spurred on by large supply shocks and sustained by high inflationary expectations. So, a first question for the panel: which were the main concerns behind the 1990s wave of central bank reforms in terms of practical policy experience and perhaps also academic thinking?
This is going to be an
And how much
academic,
did these concerns reflect
speech.
specific challenges of the 70s and 80s or more germane issues? Then we saw a downturn of inflation, and to many that looked like a major success, tolerable losses of output and employment. So
Right.
the main policy challenges in the next
This is, looking back into the 90s and 2000s, there was the
how to recoup
challenges of, labor market and central banking, but it's not J Powell. So as I said, the market is definitely looking for dovish clues, meaning that if J Powell says anything about the next rate hike, whether they're going to do a 25 basis point, it's going to push up the market and look already going up. So, quick question: do you think that
So second
gold is going to fly today or
and
dump?
then is which new concerns were
Fly
raised
and dump.
by the events and
Fly first.
challenges in the
I'm bet on the fly.
2010s in handling
Because I see the
financial
dump,
crisis and deflationary
but it needs to push
pressures.
up a little
In
bit.
particular, do these challenges suggest new trade-offs, for example, between monetary
Who's in a buy since this morning?
or between present
Moi.
economic outcomes and
Captain.
financial
I am.
So if we look at today, superficially, the situation looks like 70s, 80s redux with major supply shocks and emerging inflation inertia. So this brings us, I guess, to the most important and the bottom line question.
Oh, but actually, is he going to do? He's going to talk about central bank independence.
Challenges in the next few decades. Should we rethink central bank independence and central bank mandates? That is.
Ah, okay. So today is important because this is going to be an academic discussion. He's going to do an academic speech about central bank independence, but there's going to be a question and answer session where the panel could ask about potential future rate hikes. It's very tricky because we have to listen to some economics. So I hope you're going to learn something.
15 minutes, and after that we'll turn to a round of Q&A involving the audience.
We like that,
So
Thomas.
think about questions, and please think about succinct questions rather than statements beforehand.
So this is the first economic lesson of 2023 delivered by Jay Powell. So I don't have to do this part on central bank independence because he's going to do it.
Okay, so now let's go.
But that has nothing to do with trading really, because in Western civilized countries, central bank is independent. But it's the Q&A session which is at the end.
Sorry, Thomas. Can I ask if he's talking about this central banks being independent? Shouldn't he means that he won't listen to any request that wants to like stop the rate hike, those kind of thing, so that he can proceed to do what he wants to do?
So I don't understand the question.
Because he's talking about central bank should be independent, like he shouldn't listen to the politician, those kind of thing.
Yeah.
So if I'm guessing what he means is he's going to proceed with his rate hike without anyone asking him to slow it down or whatever.
No, but this is an academic speech. This is a presentation. So it's nothing to do with the current day. It's going to talk about academics.
I see.
And then in the question session, the Q&A session in the end, that's when where the panel could be asked about the potential future rate hikes.
Of course, really it goes back among practitioners far earlier than that. But I'd say an especially important event was the Fed Treasury Accord in 1951 that set up the Fed to be an independent central bank back in the 1980s.
Yeah, it's still very exciting, why the central banks are independent. So I highly recommend everyone to listen. And then maybe we're going to catch a few pips. But if you look at the market, it could be actually good because Jay Powell doesn't have the freedom to slap down market expectations. So in my opinion, the market is going to go up unless someone asking, or if he answers the question in the end that, no, they're not going to slow down with the rate hikes. But until that, there is no abstraction for gold to go any higher because Jay Powell is going to talk about central bank independence. So he's going to deliver a lecture and not a speech. But I was expecting, something different, similar to FOMC's speeches, and I didn't read the, the small print, just the title. And gold is already, pushing higher. So who's holding the buy since this morning?
Following your call, boss. All good.
I'm as always, Thomas.
Full margin, double your money. All the way to 2000. 2000.
Absolutely.
2000.
An area people don't think about as much, which are emerging markets. And Tobias Adrian really spoke about this, but I still think
All
most
right.
people don't quite understand. About
Actually, I'm quite glad that isn't going to be a full-blown, Powell speech, because that's difficult to live trade it. So now I can sit back, relax, and just listen to the lecture.
Countries with inflation over 40%, and that doesn't even capture things because a lot of them had hyperinflations at the time. And to get out of it, the early solution that
Looking from this perspective,
a long time was
that he's going to he might be asked. There is no confirmation that if anyone's going to ask about the rate hikes or whether they're going to slow down. There is a possibility, but from this perspective, do you think the market is going to now continue because there's a breather that J. Powell isn't going to go full hardcore, deliver a commentary, but he could be asked. What do you think? How is it going to affect the situation?
I'm expecting 1890.
1890. So like a retest of the previous highs. No, 1890.
Yes.
That's actually higher. Yeah.
That's also a major supply
And
zone
the IMF
on H4.
also over time really played a very positive role here in pushing the idea. By 2015, inflation was actually very low across the world.
Oh, was it?
But, even in places it seemed unimaginable, not just...
Was it? Ask the lower income households how high was inflation back in 2015.
With inflation under 10%, even under 5%. And indeed, many people have forgotten, that central bank independence was ever needed. I invite them to read about Turkey, for example, where the president has fired central bankers the way Henry VIII changed wives, and you can see what's resulted there. I would say there are many refinements once you have an independent central bank of how to do it, and literature to which many.
And there's
people
not
this
much
room
in the
have
economic calendar
contributed.
today, so it's going to
But
be
I
a
think the
boring day.
independence of the central bank
The
is
free or note
absolutely
auction, although
essential,
it's
starting point for
has
this.
information
If you
which
look
could
at
be used,
many
but
of the
it's not
emerging
relevant for
markets,
you
they
guys.
weren't really doing inflation
It's more for the
targeting,
fixed income
really still
traders.
doing inflation targeting, but they've used this as a device to establish their independence. Now, just to sort of summarize, I would also say there are so many things I didn't expect, and I just single out one. I'm surprised the extent to which central banks in everywhere almost are regarded as honest brokers. I mean, if you want to know what the data is, you go ask the central bank, and I think that's also part of this coming from independence. I think another thing which people in this room are very familiar with, but I think it's been very important, is the community of central bankers helping to support each other, exchanging ideas, and there's been a huge networking effect in this, in providing ideas and also support. When the whole central banking community stands behind you, a little bit, your government listens. And I think we can point at many examples of that. And then, certainly recently the central bank independence has been under attack. I certainly don't think it's an idea, which is over at all. I would actually argue that the introduction of central bank independence has been the most significant positive development in macroeconomic policy since the Second World War. Thank you.
Shoot him again.
There's Powell. There's the big man. There he is.
Shoot him in advance.
Well, Torsten, thank you, and good afternoon, everyone. Torsten's given us 5 minutes only, so I shall reserve my stories about Stefan and the resurrection of the British banking system in 2009
Yes, you should.
to conversation over dinner. I think it is impossible to understand the movement towards central bank independence without seeing it in the context of the great inflation of the 1970s and
That's
also
actually a
the
good point.
stagflation of the 1980s. The former was the consequence of...
So if you go to the website, those of you who just joined the community, and I'm going to show you the... let me just keep this one going.
Large part an intellectual mistake at the time in thinking that there was a long-run trade-off between inflation and unemployment.
If you go to the website, there is a mini lecture about the previous recessions. I really enjoyed making this presentation because it has very important information about, you know, what happened back in the Great Depression, which is why the central banks became independent from the short-term political parties.
Cases such as the UK above 20%, and as Ken said,
So only
in many
spreadsheets,
emerging markets.
Thomas.
Hmm?
So only spreadsheets. We love spreadsheets, you know.
Yeah. Where are the spreadsheets?
Yeah, I've only spreadsheets in your presentations.
Inflation, which led to
Have I?
recessions, while
I'm
inflation
asking,
still
are there
remained
any
relatively high.
spreadsheets in your presentations?
No. I left corporate world a few years ago,
undermined the belief
so I'm
in
not
the
making any
trade-off
spreadsheets anymore.
between inflation and employment, and helped to restore the case for price stability, which had been made over many decades before, arguably most persuasively by Maynard Keynes in his tract of monetary
John
reform.
Maynard Keynes.
But the attempt to achieve it after the breakdown of Bretton Woods by rigid exchange rate links collapsed in 1992 with the departure from the exchange rate mechanism in Europe of both the UK and Italy, and the end of the fixed exchange rate links in Sweden, where interest rates had been, some of us remember, hard to think of this now, raised to 500%. And the same applied to Finland. Now, politicians drew two conclusions from the unhappy experience of the 70s and 80s. First, inflation was unpopular. If exchange rates were to float, therefore,
Really?
then a domestic framework was needed to ensure price stability. And that framework was the adoption of inflation targets. And second, the measures required to eliminate inflation were also deeply unpopular, with high rates of unemployment for a while. So politicians found that setting interest rates wasn't actually much fun. So why not give that power to an independent central bank with a mandate set by Parliament? And those two conclusions led governments around the world to give greater independence to their central banks. And in most cases, this did go hand in hand with an inflation target. Now, the policy debates at the time in the 1990s are, I think, helpful in understanding the challenges to monetary policy today. But there are three important differences between then and now. First, in the 1990s...
Do you think anyone's going to ask Powell at this symposium? He's in the panel. Do you think anyone's going to ask him about the potential future rate hikes?
Yes, I think so.
Yeah, me too.
Definitely.
I bet that, if there's going to be an open question and answer, there's 5 guys sitting in a panel. The first guy who stands up among the viewers and going to, oh, Mr. Powell, are you going to raise interest rate any further? That would be quite rude in a symposium that, he's definitely taking the show. One man over everyone else.
In the 1990s, the popular support for low inflation encouraged politicians to grant independence to central banks and to support them when it was necessary to raise interest rates. I think today governments can see only too clearly the challenge of issuing substantial quantities of government debt when interest rates are rising and central banks are no longer buying their debt. So external pressures on central banks are, I think, much greater now than in the simpler days of the 1990s. And third, when they were introduced, and I think this is in some ways the most important point, inflation targets were not seen as a theory of...
No, it is. the perfect example of well-executed marketing promotion of the symposium. They invited Jay Powell. He did the speech on central bank independence, but there's actually, it wasn't around anything that, monetary policy today. It was back in the past and in general. But there is a chance, and even the description of the symposium says that this panel is not expected to talk about inflation prediction, but there is a question and answer session where the panel could be asked about the potential future rate hikes. And in panel, they mean Jay Powell, because no one cares about the other members of the panel, unfortunately.
Of the reasons for decisions on interest rates were to be set.
And also, Max Sazonov says, think there might be a previous agreement not to ask questions like this, but who knows? Yeah, there is a possibility that they asked the audience that, don't be a dick, and, there are other people here, don't talk about, monetary policy today, or ask Jay Powell. Who knows?
I worry that model builders have tried.
Maybe someone's going to crash the lecture of this lovely old guy who's talking about, he's got his 5-minute fame, but then the question and answer time, Jay Powell is going to take the show.
To be transitory, and policy mistakes followed. So I conclude really that an analysis of why many central banks were granted independence in the 1990s, along with the adoption of inflation targets, is clearly relevant to understanding today's challenges. Thank you.
Thank you very much, Thorsten. Thank you very much to the organizers. And
Ich
I was
mag
very honored to be invited here to speak on this panel on the occasion of the farewell of Stefan Ingves. For me, when I joined the ESRB, the European Systemic Risk Board, he was one of the founding fathers. He was already there, and I actually learned a lot from him in terms of the relevance of financial stability for monetary policy, the importance to need to act when it's needed, and the importance of clarity in communication. And I'm saying this not to break the rules, because actually rules are important, and that's going to be one of my main points here, but I'm saying this because I think this is all crucially important at the current juncture. As we've just heard, I think in some sense central banks have enjoyed a capital of inattention or rational inattention to risks to price and financial stability. We've lived in a period
It's quite difficult to get into the same mood as they are. They're having this symposium all day talking about, economics and academics, but we just joined, we wanted to make money, hoping that Paolo is going to speak, but it turns out it will be only a question and answer. How disappointing.
So explaining central bank independence and acting accordingly has become more difficult and also more important. Central bank independence is certainly protected by institutional safeguards. We've just heard that. And that actually includes fiscal and macroprudential policy frameworks. But I think we also need to be very accountable. We need clear communication to sustain public support to independence. So let me explain these points quickly. Obviously, as been mentioned, inflation and risks to financial stability have been low, so the public in some sense could safely delegate the task of price and financial stability to technocrats and central banks and pay relatively limited attention to the details. Now this has changed, that's my second point. So we have first of all inflation,
we are how convenient that Jay Powell is going to start a speech at the New York Stock Exchange Open. Well, they're going to start a Q&A, not a speech, because he won't do a speech. He did already.
Of the respondents, and I think that's actually on the low side.
Did anyone know that is going to be a lecture, a symposium?
No.
And I would argue that actually concerns high level.
You haven't done your homework, guys. That's quite disappointing.
Even if and when inflation rates recede. So that's the first challenge.
So, just to summarize, those who joined, we're going to listen to Hilary in a second. But basically, it turns out that it's a lecture, it's a symposium that Jay Powell did a lecture or a speech about central bank independence. So it's nothing to do with current monetary policy. Well, it does, but in an academic way. But it's not designed, a symposium, to talk about, openly that what they're going to do or not do with the US monetary policy. And there will be a Q&A session at the end where Jay Powell could be asked about potential future rate hikes, as the description of the symposium states, which is quite tricky. Now, from this perspective, there is nothing in the way for gold to go higher, because people were afraid, well, only when Jay Powell is set foot on the stage or when the Q&A starts. But if he's not going to go full hawkish, we could have... Do you remember the last time when he was asked about the potential 25 basis point rate hike? There was last August at the Jackson Hole Symposium. Does anyone remember Jackson Hole? It's not Jackson's Hole, it's Jackson Hole.
Yes, we remember.
Yes, remember.
That was a rally, but when was it? Was it August or September?
It was in September.
And September?
September, yeah.
25th of August.
25th of August.
Needed to be closed, so resolution frameworks have been certainly high on the agenda. And independence and credibility of central bank also may come under threat if there are insufficient fiscal backstops. Now, a lot has happened in the meantime. We have better fiscal and macroprudential frameworks, and that help us to prevent financial or
Are you sure it's 25th of August?
Dominance. And these frameworks are actually complementary to the frameworks for central bank independence that we've just heard about. Obviously, there's a lot of institutional safeguards to
it was
we'll
27th of August.
In Europe, primary law assigns a
Thanks,
strong role
Chintan.
to central bank independence, and the legal basis.
But when was he asked about the 25 basis point rate hike? Was it Jackson Hole? I can't remember now. It cannot be, because when he was asked, so I remember there was a young journalist asked him about, are you going to slow down with the rate hikes? And he said, yeah, we could do. Maybe, that's what he said. And the market just completely went up like 700 pips. And I was like, what the fish happened? So we could have similar kind of, scenario or event when someone asks him, are you going to slow down? Yeah, maybe. Why not?
Financial stability risks is different than for monetary policy. Financial cycles last longer than business cycles. The policy objectives are different. It's more difficult even to quantify financial stability than this is the case for price stability. And we have different types of instruments. But still, we need also independence for financial stability policies, as we've also heard from Tobias, to avoid an action bias and to avoid that authorities come under fiscal pressure. The last point I would like to make is also something that colleagues have mentioned. Legal frameworks are not sufficient. We have to communicate and to explain independence. And this can actually be quite a balancing act. So we have on the one hand the technical experts to which we have to explain our policy cycle, where we evaluate our policies, the intended and unintended consequence of policy choices. But these policy evaluations are rather technical and tuned to an expert audience. But at the same time, we need to convince the general public that the central bank acts in its best interest and protects the public good stability. So we need a translation from the language spoken by the technocrats